I'm Cary Stamp with Cary Stamp and Company, and a common question we're getting right now is a recession inevitable? And of course, the policymakers that are in power would always want to tell you, no, recession is not inevitable. Unfortunately, when you have a market downturn like we've just had, when you have rising inflation and when you have supply chain issues, generally those types of events are followed by a recession. Now, let's define what a recession is so we know exactly what we're talking about and why, yes, it's not a great thing, but it's something that is part of the economic cycle. A recession is simply defined as 2 consecutive quarters of negative economic growth. 2 consecutive quarters of negative economic growth. So, as I'm talking, we're in late June, and the quarter will end in the not too distant future. At the end of June, we measure the prior 3 months worth of economic growth. If it's positive, we don't have a recession. If it's negative, then we need to look at the next 3 months of economic growth and see if those numbers are negative as well. And once we get those 2 quarters strung together, that's the definition of a recession. The thing about recessions is that by the time the media and the press and the government tells you you're in a recession, in many cases, it's halfway over because we're looking at backwards at the data. In the last 90 days that we're about to measure right now, they may have been negative. We may not have known it. So in many cases, a recession that we go into can last a very short period of time. And by the time we're told that we're in a recession, we're actually already starting the way to the recovery phase. So why are we going to most likely have a recession? Well, the Federal Reserve is on a mission, and their mission right now is to reduce inflation. Inflation is out of control. It's out of control because there were stimulus funds that were issued as part of the COVID relief package. It's out of control because we have rising energy prices and gas prices around the United States. It's out of control for policy reasons that have to do with multiple administrations going back in the United States government. The Fed has one tool in their toolbox, and that's to raise interest rates. And the objective of raising interest rates is to slow the economy down. If you raise interest rates, businesses have to pay more to borrow money. People have to pay more to buy houses or to buy things that they would buy on credit, like cars or like furniture that they might put in their house. So those types of activities tend to slow down because people get a little bit worried. Once those activities slow down, then job growth slows down and layoffs start. So you will be looking around you and you'll see that some of your neighbors may have gotten laid off, or they've delayed projects, or they've delayed spending. That's all part of this process. The other thing that's happened, and that's been really bad, as part of COVID especially, has been the supply chain crisis. And the supply chain has exacerbated the inflation because we all want things like automobiles and new appliances, but they're shipped from other countries, and when you can't get them shipped because the factories are closed in China, that means that the prices are going to go up because people that really want those things are going to be willing to pay a little bit more for them. Lastly, keep your eye on real estate because this will probably be the last one to fall. We've had a phenomenal real estate market in the last couple of years. In certain hot markets, especially in the Sun Belt states, real estate has gone up substantially. But with rising interest rates, that means that buyers who have to finance their homes are probably not going to be as prevalent in the market. So if you're thinking about getting rid of your house and either downsizing or moving somewhere else, you may want to plan accordingly because it could take a little bit of time. Are we in a recession right now? I don't think so. But do I think that a recession is inevitable? Yeah, I think it's on the horizon because of what the Federal Reserve is doing to dampen the economy and slow down the rate of economic growth so that the price effect can start to go down. I'm Cary Stamp. This has been a Principled Wealth Moment.